Why is understanding tax liability key to filing taxes correctly? Imagine trying to hit a target blindfolded. That's what it's like to file taxes without knowing your tax liability. If you don't understand how much you owe, mistakes can happen easily. Knowing your tax liability means you understand exactly how much money you owe the government based on your income. This is important because it helps you report your earnings accurately. If you underreport, you risk penalties or even legal trouble. Overreporting can mean paying more than necessary, which is money you could keep. Calculating your tax liability involves several steps. First, you add up all your income from jobs, investments, or side businesses. Then, you subtract deductions like the standard deduction or itemized deductions for mortgage interest, medical expenses, or charitable donations. After that, you apply the correct tax rates based on your filing status and income level. These rates are progressive, so higher income parts are taxed at higher rates. Once you have your initial tax amount, you subtract any credits you qualify for, like the child tax credit or earned income tax credit, to lower what you owe. Understanding your tax liability is especially important for avoiding legal mistakes. For example, if you don't pay enough tax, the government can charge you penalties and interest. This is called underpayment, and it's a common mistake that can lead to fines or audits. On the other hand, paying too much means you're giving the government more than you need to. That's money you could have kept for yourself or invested elsewhere. For self-employed individuals, knowing your tax liability is even more vital. They need to pay income tax and self-employment taxes, which cover Social Security and Medicare contributions. If they don't calculate these correctly, they might face penalties or a large bill at the end of the year. Keeping detailed records of income and expenses helps ensure calculations are correct. Using reliable tax software or consulting a tax professional can also prevent errors. Understanding deferred tax liability is also helpful, especially for businesses. It refers to taxes owed but not yet paid, often due to timing differences in revenue recognition or expenses. Managing these properly ensures your financial records stay accurate and compliant with tax laws. In the end, knowing your tax liability helps you pay the right amount of taxes, stay within the law, and avoid costly mistakes. It's a key part of responsible financial planning and keeps you clear of legal trouble related to tax law compliance errors.